Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. Okay, Nick Santiago, President and CEO, the guy that threads the needle from 1,000 yards out. All right, Nick, thanks for coming back on the show.
Great to be back, Michael. Thank you.
All right, my pleasure. JJC, you want to start with?
Yeah, I wanted to start with that JJC. This has been pulling back pretty nicely. This is copper. Today it's up a little bit. It's up about 59.60 cents, but I think traders should watch that nice little level around the 44.60 area, 44, maybe it's 44.70, but that's a nice little level that traders can look for a bounce. Right now the markets are a little bit overbought, so even though today the JJC is bouncing a little bit, I do think that it is due to pull back a little bit further. Break of that 50-day moving average should take you down to that 44.60, which should lead to a nice buying opportunity.
Okay, that sounds good. Upside, do you think it's just going to stay in a range, or is this thing going to take off and trend later?
Well, I think there's a chance of it moving up, depending on the amount of inflation that is created out there. But right now, I think you're probably more in a range, 48.50 being the high end of the range and 44.50 being the low end.
Okay, that's good, because I want to get that out, because there are people that can use strategies with options and things of that nature.
Absolutely. Very important.
Okay, RTH.
Yeah, RTH is something I don't really talk about that much, but one thing I do is I follow this retail ETF very, very closely. This is the Market Vectors Retail ETF, and right now I just want to just let listeners know that it is now approaching its high end of the range, which I think is around $45.75 to $46. So traders that were bullish retail stocks, now you want to start to scale back. If you have any retail stocks that are doing very well, start to trail your stop loss, because the RTH is telling us that we could be due for another pullback shortly.
Okay, good to know. Good to know. Have you been in this for a while?
Well, I trade this on and off. Recently, around that 200-day moving average, around 43, that was a buy entry. Now it's time to take profits. We get up a little bit higher towards the 46 level, would be a time to short.
Okay, got it. GDX.
GDX, which is the Gold Miners ETF, very, very important. A lot of traders are still interested in getting into this GDX right now. I still think that this is vulnerable to a little bit lower prices, so I would be a little bit careful with this one at the moment. If it does make a move to the upside, I think you could probably see a move around the 47 area, but ultimately it looks attractive if it could get back down to 40, which I very well think it can.
Okay, all right, that sounds good. All right, the big question on everybody's lips, Apple. What's going on with that?
Well, right now, Apple, for the most part, is in a holding pattern. It had its first close 2 days ago below the 500 level. I think that was more of an options X institutional game being played by the large financial institutions with a lot of puts and calls. Who knows where the imbalances are there? So I think the institutions took that thing through 500. It looks vulnerable to further downside, but right now, unless you get any secondary day below $500, I mean, for the most part, it's still holding, and the institutions are really still defending this stock at 500. So I'm going to give Apple the green light right here and say it's still okay. But if it does close below 500 again, I think traders got to watch because the 465 level is definitely in play afterwards.
Okay, got that. And the upper end of the range, are you looking for it to? I see a 600 bump there. What are you thinking?
Well, I'm thinking 560. 560. I would probably look to short the stock.
Got it. That's a good way to put it. All right. Now that we've got through all of the initial stocks, J.P. Morgan is still moving higher. What do you say there?
Yeah, I mean, this thing's, what can you say? The financials seem to went from the most hated to the most loved. And JPM, as we talked about last week, now approaching that high from March of 2012. So it's getting up there. It's long in the tooth, very long in the tooth. All of these financials are. But this one's still not giving up anything at the moment. So we just have to give the market a slight upside bias. If you notice, Michael, the overall volume in the major indexes, or just say the SPY, the S&P Spiders, has been really anemic. I mean, it's been so light. We have been trading around 100 million shares, so it's very tough to short a dull market. But up here, I would not be chasing J.P. Morgan. I would not be buying it. And if JPM starts to pull back, traders could look at it around the $42 level for a bounce. But this one is just too long in the tooth at this stage of the game, and any sell-off in JPM will indicate a sell-off is coming in the overall stock market indexes.
Okay, well, then let's go over to the S&Ps, what you were just talking about. Do you see that we're going to be – a while ago I had a 53-day cycle that ended because I run calendar cycles, and it ended on Sunday here as we go into this weekend. And now all of a sudden you're saying, hey, it's a little long in the tooth, maybe not. What's your numbers telling you?
I actually have a little pullback cycle right now for the market myself. I was looking for late yesterday afternoon or today as a possible short-term turning point. Only thing is this cycle is it's rather weak and it's short-term, so I don't expect much, but I do think that we are susceptible to a pullback here. Okay,
you got any support levels there?
Well, right now you have a big level on the spiders around the 145.40 level, 145.50, very close to the just above that 20-day moving average on the daily chart. I mean, as long as the market holds that level, theoretically, things are still fine, and they can go up. If we breach that level on a closing basis, then watch out. We could be in tune for, 60, 70-point sell-off in the S&P cash.
Okay. All right. Well, we got a minute or two. Let's slow down a little bit and talk about some of the recent trades that you put on and what happens in the trading room. We give our audience a feel for what kind of action they see in there.
Yeah, if you come over to the trading room each and every day, today, I don't even know. I mean, I didn't get all of the trades, but we've had probably about 7 or 8 trades, all winners. I don't think we had a single loser today. Also, I do a morning video, which your listeners are more than welcome to try out for free. It's posted on the blog at about 9 o'clock in the morning. You'll get all of my morning pre-market setups before they even begin. They're all scalp setups, so they're not swing trades or anything like that, but they're just for intraday moves. And a lot of my traders are on those trades right at the open. So you come over to In the Money Stocks, take a 7-day free trial to our chat room. You'll see all of our morning setups, everything that we do there, and you could just come on board and see what we're all about.
Now, you mentioned you're in 6 or 7 trades, I think you said today, right?
Yes.
Okay, give me an idea, give our audience an idea of what it is that you're trading. I know we talked about some ETFs here on the, and some indexes, but
sure. Well, we will predominantly trade mostly individual stocks. So today we traded Williams-Sonoma. We went long that stock at 43.77. We sold out of it at 44.37 in just a few minutes. So trades like that are what we do. My partner Gareth also, we call him the small cap king. He put out a winner today. I think that bared about 80% in one day. So, some days we always like to say in the chat room, you never know what day is Christmas, but any given day you could find some big winners in there. I also gave out Citigroup at $41 today, and we captured that gain as well for about 30 cents in just a few minutes as well. So, I mean, those are just a couple of them that we traded earlier this morning, and we do this each and every day.
What's we haven't talked with you about the oil indexes. But, you got any ideas on what's going on over there?
Yeah, well, when I'm looking at oil right now, I think crude might have just a little bit more upside because the dollar's been a little bit on the weaker side. But when I look at the oil stocks, just say the Exxon Mobils of the world, I think they may be putting in a near-term high right now. So I would warn traders against trying to buy anything like Exxon Mobil or Chevron. I think these stocks are real vulnerable at this stage of the game.
Okay, all right. Now, you had mentioned getting out of the retail, actually taking profits on the retail index, right?
Yeah, taking profits on retail, and also, it has probably a little bit more upside. I would say if you're looking at that RTH, like I mentioned earlier, you have upside to probably 45.75 to 46. But if you own any of these retail stocks, these leaders,
that's where I was going.
This is like Home Depot, Lowe's. This is where you want to start to get protective. You want to start to trail your stop loss. You don't have to get out of these issues, out of these equities, but I would just start to trail the stop on these.
Okay, so you're going to also, because I would imagine that the pullback could be pretty decent on some of these, how stretched out they are now.
Yeah, I mean, you get any kind of selling pressure, especially in the overall market. Like I mentioned earlier, the spiders have gone up with no real volume, no real conviction behind it. So when the selling pressure comes in, who's left to buy? you can get fast and furious moves to the downside.
Okay. All right. Well, circling back, I just pulled up my crude oil chart. We're running somewhere around, about 95, almost $96 a barrel. Are you thinking that this may be a critical level here or a little bit more?
Yeah, I think crude might have a little bit more to the upside. I'm leaning more towards 97 to 98.50 as a top in crude. If you just go back and you look at that weekly chart of crude oil, spot crude that is, you'll see that basically in September, crude topped out at $100. So, and then prior to, I guess, the week of the 17th of September, we really had a big sell-off there on an uptick in volume. So, as you get into that $97 to $98 area, that's where those traders are going to be dumping crude oil.
Okay, yeah, we got some other people on the show that are thinking that this next top could be something well worth getting a piece of.
Oh, I absolutely believe that is true. If you just go back and you look at the crude oil market and you just see the top in 2011, you got a lower high in February of 2012. You got another lower high here in September 2012. The next lower high is going to be the granddaddy. So, yeah, you want to be part of that move downside.
Got it. Thanks for keeping us on the right side. Before we go, one more time, contact information for our audience.
Yeah, just come on over to inthemoneystocks.com. Take out a 7-day free trial to our chat room, to our research center, to get all of our nightly setup, all of our cycle work, and all of the information that we put out each and every day.
Thanks for keeping us on the right side of the market, Nick.
You're welcome, Michael. Thank you for having me.
My pleasure. Nick Santiago, President and CEO of InTheMoneyStocks.com. The guys pulled some amazing trades off here on the show. Coming up next,